Welcome to the Create More Value podcast, sponsored by Fortuna Advisors, the boutique shareholder value improvement advisory firm. Create More Value is a series of conversations with senior executives, board members, investors, and other experts that have overcome challenges to create exceptional value for their companies. There are many ways to drive value, so we cover a wide range of topics. I am the host, Greg Milano, founder and CEO of Fortuna Advisors, and I hope you enjoy the conversation as much as I did. I would like to welcome Carl Lukasz. Thank you, Carl, for joining me on our Fortuna Advisors podcast, Create More Value.
Thanks, Greg. I'm a big fan of your podcast, and I'm happy to be here.
Thank you. Carl Lukasz is currently an advisory director at CVC Capital Partners and senior advisor at TorQuest Partners. He serves on the board of Zypex Chemical Corporation, a manufacturer of proprietary crystalline admixture products that provide waterproofing and strength for concrete, and chairs its audit committee. From 2014 to 2020, Carl served as executive vice president and chief financial officer of Univar Solutions, listed on the New York Stock Exchange, a global chemical and ingredients distributor. In 2019, he was awarded Public Company CFO of the Year by FEI. Before joining Univar Solutions, Carl held finance and commercial leadership positions at DuPont, over a 30-year career where he gained valuable experience with growing science-based manufacturing businesses. This included strategy design, new product development processes, channel strategies in new geographies, intellectual property protection, and improving sales force effectiveness across a wide range of industries. So, Carl, what do you mean when you talk about having a playbook to win, including how you design business strategies and understanding business plans?
Well, Playbook to Win is actually taken from the title of a book on strategy, Playing to Win, by Roger Martin. You know, Roger, one of the business world's best strategy thinkers. But let me back up a bit and say that my perspectives on business and finance were built from working in a global manufacturing company, a lot of R&D. But early in my career, Greg, when I was a young, aspiring finance professional, I found myself in meetings with production managers, chemical engineers, research scientists, new product developers, marketers, sales managers, and I'd hear them debating different options for our business and our products. How can we maximize, production uptime, given different combinations of SKUs? What product performance features should we enhance? What finishing steps, like converting to smaller lots, color, packaging, all that's, how should we advertise, through what channels were we going to move the product to the end users, things like that. And I saw none of these aspects of doing business were in the core curriculum of the finance leader. I was expected back then, decades ago, to kind of stay silent and go along with the group's decision. But obviously, every one of those choices was a decision that would define our playbook to win. So it was about that time I discovered Roger's book, and I analogized his explanation of what business strategy is to a coach on a team with a clipboard. The coach didn't just cheer, rah, rah, rah to the team. They had a defined playbook to win to defeat their opponent. And our top talent in the company was on the field. They were the ones that were going to execute the playbook to win. So that's when I realized that those choices, those important choices, would affect the outcome of the business, and in aggregate really represented the growth strategy of the company. So, I needed, to add more strength to the tool in the toolkit for understanding what a business strategy is and how to improve it. So my belief is that a CFO can contribute more value for their team and company, if they're able to really influence in those meetings, those decisions and choices that in aggregate represent the business strategy. So that's what I mean, Greg, by playbook to win.
Oh, that's really good. That's really good. So in terms of driving success, one of the important things is the ability to have competitive advantages, things that differentiate you from the competition. How do you identify and invest in competitive advantages?
Well, from the CFO lens, if the growth strategy is a series of choices to win more customers away from the competition and grow the business, make a healthy economic profit, then the essential ingredient to that strategy is, who's the opponent? Who's on the other side of the field? How are they competing to beat us? What are they good at that we may not be good at? And then what can we choose to differentiate our product and service offering from theirs? And can we protect it? And can we sustain it over the long term? So that's the importance of, as you know, of what the competitive advantage is of the company. And the CFO, before I get to the CFO, I worked, in many of those discussions that I was talking about. The word competitor never came up. Oftentimes, the company I worked for, our strategy for competitive advantage was to out-invent the competition. We were going to bring products to market that had better features and benefits than the competitors, and that the customer would be willing to pay a premium for. So we wrapped up that innovation and science with a brand strategy that aimed to create a premier persona for the product as the best in the industry. And that worked well for a long time. It really worked well when our technology was novel, but like everything else, reversion to the mean, that faded over time. And good enough, lower priced competitor products always came into the market to take market share. So making that choice of how you're going to differentiate, is so important. And so how can the CFO contribute to that? I think that the way they do that is they ask those questions about competitors at the C-suite when you're having those strategy discussions, and precipitate those arguments. The Salesforce leader is going to have a real view on how good we're doing versus competition. Heads up, they're usually going to say our prices are too high. The production team is going to have a view on we're the best or we're not. Or if we put more investment into our manufacturing equipment, we might be able to get more throughput and lower cost per unit. The R&D team is always versed in what the competitors are filing, what patent filings are out there near ours. So you've got all that wealth of info. It just, the question isn't asked. Again, back to what I said, oftentimes the discussion of strategy and playbook to win is as if there's no opponent on the other side of the field. And you've got to know, how are you going to differentiate yourselves from the opponent, and how are they going to react to moves that you make in the marketplace?
Yeah, the competitive reaction is a really interesting one, because I think that's something that people don't think about enough. They assume a static world, right? When we look at, financial people like to prepare forecasts and do discounted cash flow analysis, IRRs, NPVs, paybacks, and so forth. But very often the assumptions underestimate, at least, if not completely ignore, that the competitor is going to react, right? If you suddenly come out with a better product than the competitor is going to drop their price to compete with you, or they're going to leapfrog you with a new features. And, that's very often not considered at all.
Great point. Great point. In fact, let me break into jail here and upset all the finance universities around the country. I once was getting advice from a noted business strategist in Asia when I worked over there, and he asked me what my key problem was, and I said, "Hey, it's oftentimes I can't get approval to invest, in the projects I want to out here in Asia Pacific." And he said, "Well, tell me, what your approval process is." And I said, "Oh, we have the best process. We do NPVs, future cash flow projections, NPVs, decision and risk analysis. We identify what the top risks of the project are. It's beautiful. It's better than even the DuPont formula that was invented in the 50s. And he said, "How arrogant." And I said, "Well, what do you mean by that?" He goes, "Wait a minute, you're leading the business here. Your job is to create the future, not to assume that the past is going to replicate itself." Mm-hmm. And that stuck with me, for my whole career. So that's what you triggered when you mentioned that static case.
Yeah, sure. So
Now,
I want to take a different angle on competitors. So we
yeah,
talked a moment about competitive advantages and how your products and services compare to the competition and what differentiates you and so forth. One of the other things that CFOs benefit from is understanding in detail what is the competitor's strategy. Are they low cost? Are they highly differentiated? What is their expansion strategy? Understanding their strategies and determining how you should react to what the competitors are doing, rather than again just ignoring them, keeping your head in the sand. Do you have any thoughts on how to understand what the competition is doing?
definitely. Yeah, that's really for the CFO now, for the CFO. But
Right.
I think there's a, and especially now with social media and the internet, there are two big ways that the CFO can step in and contribute to that discussion. Um, with public company disclosures today, offer a wealth of information. I used to always tell my teams, look, CEOs and CFOs disclose a lot on those investor calls in the Q&A sessions every quarter. Let's take a look at that. And going back to the C-suite, there's a lot of your customers give feedback all the time to your sales force. Usually it's about price, but often performance, and they raise specifics about competitor products. That's one source. The other source are your suppliers, and they often will tell you, what's going on in the industry, and perhaps what they're working on. In fact, one of the CFO teams that I was on, we within the IR team, we created a CIA, competitor intelligence agency, as part of the IR function. And their job, in addition to the IR function, was to compile what the competitors were saying. We spread that out. The sellers were supposed to track the advertising and trade publications by the competitors, so you really can get a lot of that information. But so that's one. And to take that one step further, I think, and others might disagree, I think it's a natural for the CFO to grab the steering wheel on internal dashboards that monitor company progress against the critical operating tasks for the company, key performance, key KPIs, key performance indicators. I like the idea of the CFO grabbing that steering wheel to lead the organization first in defining what the KPIs are, and the COTs, the critical operating tasks that the team has agreed on for the year to execute the growth plan, and to run a very disciplined process across the whole company. Oftentimes, as you're monitoring your KPIs, how the company's doing it could have a direct tie to how the competition is doing. And so that's that natural tie into your question. So maybe those are two less recognized competencies for the CFO to create more value on the team as a significant contributor to that kind of intel.
That's cool. That's good. I think that's really great. So now I'm going to take us in a little different direction to an area that I know is really personally very important to you. So how, as a CFO, how do you build a high performance finance team surrounding you?
The ability to build a strong high performance team, not just for the CFO, but for every leader in the business, it has to be one of the top competencies needed to create more value for the company. I believe that a high performance finance team, actually, you can go one step further, and it can be a source of competitive advantage. Speaking respectfully, finance tends to get settled into fortified silos. You've got the controllers, the SEC reporting, treasury, tax, investor relations, internal audit, FP&A, business finance, the transaction processing team. Each one of those competency areas has become more and more technically specialized over the years. And the challenge for the CFO is to break down those silos. So if you're going to build a high performance finance team, a way to do that would be to have those key leaders join you in basically a management by objectives process. So, define a midterm definition of success for the overall finance function, agree on a 4 or 5 needle moving goals for the year, that would align with the company's growth plan. Each sub-function then, flows that down into their teams. They define what they must achieve for the year. And the CFO's got to create an interdependency among those leaders of each of the competencies, not a competition. Left undisturbed, it gets a little competitive. So fix that, and lead by example. Get benchmark data on, are you invested adequately in each one of those sub-functions? Reward the right behavior, recognize it, call it out, coach the individual behaviors you want to see changed. You've got to put and then on top of that, put the time in to having high quality, specific performance discussions with each of those sub leaders. And there's ways to do that. It's often not a best practice, but there's a really good way to do that in detail. I use a guidebook that I've used for 20 years. But lead by example. Run your own managing process that way with your leaders, and it takes time. The hard part here is that it's easier. The magnet is going to pull the CFO back to the conference room with the C-suite and think big thoughts, or go put out fires. But, the soft stuff is the hard stuff, and it takes more time. But I'm convinced that if you do that, it'll pay huge dividends. Greg, think for a minute. If you were the CFO and your finance team, imagine if they delivered to the company, a lower effective tax rate than the comparable competitors, a lower effective borrowing rate than the competitors, timely, impactful insights on the business performance from the FP&A team that enable higher quality business decisions, lower cost per transaction for payroll, accounts receivable, accounts payable, against the benchmark, working capital management, internal controls that detect fraud and prevent fraud. I loved talking to the internal auditors about, you guys are gold miners. Go find the gold, especially now with cybersecurity. Zero SEC letters requiring revision of the public disclosures, and of course, the foolproof protection against any restatement of financials or debt covenant violations. So if you as a CFO can turn in that kind of report card, you and your team are creating a substantial amount of value for your company that can be used to reinvest for growth in the business.
That's really great, and I agree with that. I just want to probe on one thing that you said. You said you don't want to create a competition among the members of that finance team. Isn't that hard to do? So if you've got a treasurer, a controller, maybe a head of IR, a head of FP&A, maybe a handful of other people reporting, depending on if you're responsible for IT or whatever. Don't all those people want your job? I mean, aren't they basically competing to become the next CFO? And or at least several of them, maybe not all of them. Isn't it hard to get them to really be aligned and not compete?
Yes. It's not all of them all the time. Could be. It's usually a few. If you're lucky, that sort of natural selection will present itself and over time would be accepted by the team. What helps is that each of the sub-competencies really, has gone up in multiples in specialization. The tax world today is outrageously complex, global taxation, and even the treasury world. The treasury world for sure, with the way these debt agreements are written now, it's really scientific. And then the SEC reporting, how extreme that's gotten. What the rules are there. So over time, that sort of natural selection kind of settles out. I'm probably not saying that right about natural selection, but yes, it's a challenge, and you've got to deal with that. It can precipitate bad behavior, not team enjoining spirit, but that's the challenge. That's the challenge. There's no answer in the rule book there.
Yeah, no, I appreciate that. I appreciate that. Okay, let me turn to another topic in a little different direction again. When we've spoken over the years, you talk about the need to understand the company's environmental impact, and that's even important for the CFO. I mean, CFOs sometimes view that as somebody else's job. So, what do you mean by this? What is the role of a CFO when it comes to the environment?
Great question. And my bias showing I came from manufacturing career, but also I'm a senior fellow at an organization called the Mission Possible Partnership, which is a nonprofit catalyst organization trying to accelerate investments that decarbonize high CO2 emitting manufacturing processes, like manufacturing steel, chemicals, aluminum, cement, aviation fuel, things like that. So that has opened up my windows about what's happening out there. And I know that the early hype from the investment community around green investments has been tempered. But outside of that, I think the CFO needs to understand that there are plenty of indications that increased regulatory requirements are coming. They're being enacted by governments, national and local governments, to help countries and companies meet the net zero emission goals that they've publicly announced.
Mm-hmm.
There's lots of funding piling into this by governments primarily, but also by foundations and other environmentally oriented organizations. And if you're a public company CFO, you know how your sustainability report has gained a lot of content and data and attention from the SEC, but also investors. And
mm-hmm.
The sustainability goals, I think, Greg, the big change that I've seen is that they now have become embedded in the growth strategy of the company. So linking back to our conversation on growth strategy and how important that is to the CFO,
mm-hmm.
There's a defensive point here and an offensive point. The offensive point is, what changes in my industry could present an opportunity to enhance our product, to make us more attractive to a changing, demand formula by the customer, or maybe regulations that give us an opportunity. That's the offensive side of it. The defensive side is, I think all manufacturing companies and industries have to expect tighter transportation fuel standards, perhaps a carbon tax, not maybe in the US, maybe not. Carbon pricing mechanisms are on the way. Cross-border carbon content restrictions, like are already up and going to be implemented next year in Europe. Government quotas on procurement. How would you like to lose the U.S. government as a customer, because they now need to buy clean steel, cement, aluminum, hydrogen, ammonia, things like that. Financial incentives, for buying materials that can be recycled versus single use. All that's, I don't want to say tidal wave, but it's in the works. And, it's not next year, but it's coming, along with increased SEC attention to what companies and CFOs say public about all this. So that's how I see it as an opportunity for, first of all, CFO can't ignore this, I don't think. And they could be blindsided and their strategy could be damaged. But I think the CFO should be a key partner of the company's chief sustainability officer.
Yeah, I agree. And actually, one comment I'll make that I think is an important role for the CFO. I think if you think about all the different stakeholders, the different environmental impacts, but also other things, very often we have to make trade-offs. We can benefit this group or that group. We can benefit this community or that community. We can do, we can't do everything. Or sometimes it's even worse. Benefiting one group hurts another group. And, sometimes it's tough to make these trade-offs. And I think finance organizations and CFOs in particular are better at quantifying decision criteria in situations like that to try to make those trade-offs and to try to take something that seems like a vague, qualitative, subjective decision and try to make it a little bit more quantitative is an important role of why the CFOs need to be engaged in this and not just leave it to other people. So, yeah, I think that's great. That
definitely.
You said all that.
Definitely.
To be a successful CFO requires really good communication skills, when dealing with your team, but also the rest of the organization, the board, the investors, the public at large. CFOs are much more public people now than they were, when we were young. And
Mm-hmm.
how do you develop those skills? How do oftentimes the people that wind up climbing through the finance ranks are not the most, you know, smooth communicative people in the world. Their strengths are their analytical skills usually. How does a rising CFO develop the ability to excel at communication?
That's a great point. Yeah, I think it is one of the competencies, Greg, that is a vital skill set for the CFO to have to create more value. The better you can be at getting your thought into your audience's head, the more effective you're going to be as the CFO. But I'm not suggesting, I don't think that the CFO needs to be, an extrovert with polished, superior vocabulary and oration skills. It's not that. It's really about being, the finance leader of the company and being effective in communicating your message. So how do you become more effective at communicating your message? There's some age-old, tried and true practices that I've been a student at this for 40 years now. But I'd say number one is to start with, put yourself in the shoes of the audience.
Mhm.
Focus on them, not on you. What do you want them to take away from what your communication is, whether it's a formal presentation or a team meeting? Number two, always prepare in advance. Decide what it is those key communication points, takeaways are. Write them down, outline, even on a back of an envelope. Then get the slides. Only if you need it. A lot of finance people are called upon to go make a presentation. The first thing they do is open PowerPoint. Wrong. Let's not do that. Let's be a lot more thoughtful, go upstream, say, okay, what are my key message points here? And then unpack those in a thoughtful presentation. Keep it simple, convert the complex into understandable summary points, avoid jargon, technical jargon, special call out on this point to our beloved colleagues in the tax team, the treasury team, the SEC regulations team. Put all that jargon aside and keep it simple.
Mhm.
A lot's been written about storytelling. I think it popped up as a do this more 10 years ago, but a story telling a story is a good thing. It might be engaging for the audience, humorous, can help the CFO connect to the audience. Good tool to have in the toolkit. But I think that the bottom line point I want to recommend is that as the CFO, more often than not, you're trying to convince your audience of something. And for example, agreeing on how you believe the company is performing, agreeing with you, the CFO, on what we need to invest in, approving the budget that you just presented, or getting behind an action plan that you're proposing. So my thought for the CFO to communicate better is to think of it as a compelling argument. A well thought out, convincing argument takes storytelling to the next higher level.
Mhm.
And if you can get your audience to say to themselves, hey, I think that the CFO is right here. Or, hey, that isn't half bad idea. Or that makes sense to me. Or, hey, that's a good idea. Or, hey, why aren't we doing this? If you can get your audience to that point, then what you've done is you've created faith in your argument in the organization, and you've created an aligned community of action. Keywords, community of action. If you as the CFO can create communities of actions aligned with your compelling argument, that's nirvana. That's what you're aiming for. That's how you get things done, particularly in large organizations. So there's plenty of stuff on the internet out there, expert sources on how to polish your communication skills, but I've not seen that one out there about
Mhm.
think of it as presenting an argument.
Hmm. That's good. That's good. This has been really great. Do you have any final comments to kind of summarize things, Carl?
Yeah, we covered a lot. I'd say, okay, maybe what are those less recognized competencies that a CFO, should focus on to create more value for the company. Playbook to win, be an active influencer of the choices your company makes on defining the growth strategy, competitive advantages, figure out, what your company's current ones are, and are you investing enough in them to make sure that they're protected and can be sustained. Execution, jump on the opportunity to lead a disciplined KPI, COT, OKR process, to monitor the company's execution. Finance as a competitive advantage. Build a strong finance team that creates a lot of value that your company can use and reinvest. Environmental's coming. Engage with the environmental changes that are underway affecting your industry and your company, and then effective communication. So I think that's kind of a rundown of what we covered, Greg. Thanks for the chance to have a discussion with you about it today.
Oh, that's really great. So I appreciate it. We'll wrap there. We've been speaking with Carl Lukasz. Thank you, Carl, for joining us for this important conversation.
Thanks, Greg. Great to be here.
You have been listening to Create More Value, sponsored by Fortuna Advisors, and I am your host, Greg Milano, founder and CEO of Fortuna Advisors. I hope you have enjoyed this episode. Fortuna Advisors helps companies with strategy, capital deployment, business management, corporate culture, and incentive compensation, all aimed at driving top quartile total shareholder return and the equivalent for private companies. To learn more, contact us at info@fortuna-advisors.com.